Folks, we are watching Meta shares very closely. Of course, this is Facebook, FB, the parent of Facebook. And at around 1 o'clock, the stock was down about 1%. Right now, we're seeing a bit of a gap down to about 4% lower as we run up to Meta's earnings report after the bell. Investors are going to be watching these results very closely, particularly zeroing in on ad growth, considering Apple's App Store privacy rules could still have a negative effect. The report comes on the heels of a whirlwind tech-led sell-off that we saw yesterday that sent the NASDAQ down to its lowest level since September of 2020. And look at the NASDAQ 100 tech index. It fell 3% since Monday's close. And as we look now, it's down about 4% at the moment. During a big week for tech, we've got Amazon, Twitter, and Apple releasing reports tomorrow. Let's talk tech. Joining me now, President and Chief Analyst at TECHnalysis Research, Bob O'Donnell, and Oppenheimer Chief Investment Strategist, John Stoltzfus. All right, Bob O'Donnell, you've got to tell me exactly what you are specifically looking for from Meta earnings.
Well, look, you exactly nailed it, Liz. It's all about advertising earnings. And we already saw a few warnings from Snap. There are questions about what Apple's changes have continued to do to Facebook ads. And look, the Metaverse version of Meta is still years away, right? I mean, they're selling more Oculus headsets, but it's a tiny, tiny market still. And we're not going to see dramatic growth in that for quite some time. So not only is that short-term concern there's that longer-term concern of where is this company really headed? Because the Metaverse is not ready yet.
Yeah. I mean, he'll either look like a genius or why did he push for these avatars? And, you know, we talked a lot about it when he launched it using this video that's on your screen. And it seemed interesting and exciting. But, you know, at a time where people are just getting out from COVID, they want to see real people in the real world.
Exactly.
I did find it interesting. But as you look at this, you know, yesterday we had Mark Mahaney on of Evercore. He calls Facebook the leading social media asset in the world. He said he has a contrarian play. He loves it long term. He basically said that he knows they're going to have a problem with the growing revenue for ads. But that alone, they feel, is going to be a $10 billion hit this year. Facebook has said that. Yet he still believes in Facebook and Meta. What do you say to that?
You know, again, I have serious doubts. Zuckerberg has made a point to say they're really focusing towards this notion that the metaverse is going to be a very real thing and an important part of people's lives. And they're building new products and services based around that concept. And I just don't really see that happening. And it's the traditional Facebook stuff that's going to keep them afloat. And even there, they're seeing a lot of challenges, obviously, with what's happening with Twitter. You know, actually, LinkedIn did very well for Microsoft yesterday as part of their earnings. It's not as, sexy and as exciting, obviously, but, you still have competition in the social media space, and with what Musk may or may not do with Twitter is obviously going to change the whole dynamic of how people think about social media. And finally, to your point about people coming out of the pandemic, look, they want to be back in person and talking to people and interacting with people that way. And I think that speaks somewhat negatively to all these digital services.
Can we just point out, John, the NASDAQ just turned negative. Okay, did we warn people at the top of this hour? Did we? All right, NASDAQ's down about 7 points. Russell is in the red. That was the first one to go. Obviously, this tech-led sell-off is not over. I mean, we do know that there's some concern there, but when you look toward an Apple or an Amazon, these are great companies that maybe are off their highs. How do you at Oppenheimer look at this?
Well, the way we look at it, Liz, we consider, are you a trader or are you an intermediate to longer term investor?
Right.
For the trader, the question is, what have you done for me lately? What's Q1 reporting look like? What's your guidance moving forward? On the other hand, for an investor, this may be an opportunity to consider spaces within technology that have been oversold, babies that get thrown out with the bathwater on near-term concern. Remember, traders generally, near-term, it's fear, greed, and leverage. For intermediate to long-term investors, there's always an element of fear and greed, but it's the necessity to invest for things in the future, looking at longer-term trends.
Right.
I don't mean 100 years from now, but I mean 12 months, 18 months out, that kind of thing. Related to advertising, in an environment like this, with the inflation going where it is, concerns by small business about where we're headed in the economy, you're going to see advertising suffer. It's natural. But you have to consider, in many of the cases of these companies, if it's a streaming company, what you're looking at is you're saying, wow, content is expensive, and there's a lot of deep pockets that are bidding for content.
Except that I would say Netflix, people are still paying for Netflix. They've got a slate that's coming out with great movies starting from May till about July. It's down another 5%. Warner Brothers Discovery is a little bit different. It is just having a difficult time. It's now below $19 a share. Warner Brothers Discovery down another 5%. This has been a very messy picture. Gentlemen, we have so much breaking news we've got to run, but Bob, John, lovely to have you.